Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, January 2nd, and it was the first trading day of the new year. And we had some really nice moves in terms of volatility within the implied move today. And we did open SPY with a gap up to just above the 35 EMA, and then with that second candle we tapped the top of the implied move, and that is where we pulled back down. We got back underneath the 35 EMA, and then we dropped to the opposite end of the trading range to 581. That was the bottom of the implied move, and you could see that we had the rest of the election gap right here, which is also where we bounced on December 20th. And between the bottom of the implied move and that election gap, we did see a pop back up to close down 0.25%. So we did use 100% of the trading range today, opened at the top of it, dropped to the bottom of it, and closed relatively flat. So far, the election gap is still holding us up as of the first day of the year. We do, however, have these overlapping gaps, this down gap, and then the up gap that was from the election, and the 4-hour 200 moving average underneath that. And SPX, same thing over here. We opened with a gap up to the top of the implied move. Then from there, we dropped down to the bottom of the implied move, and then we closed in the middle. So right here, this was December 27th and December 31st. We did see that as support. Today, we closed right at that level. And this gap again brought us back up, and this gap has collapsed down a little bit. We filled it back here, but right at the very bottom here, we did bounce back up. So absolutely beautiful moves today. We did stay completely within the implied move, and SPY did close down 0.25%, SPX closed down 0.22%, VIX came up 3.34%, and we did trade completely within the implied move. And QQQ, same thing over here. We did open with a gap up, and we did gap up to the 35 EMA, and we did get smacked back down underneath the 50-day moving average. So closing out the last year, we did see a bounce on the 50-day moving average right here, and then we closed right on top of it. Today, we gapped up. That 35 EMA was right there, smacked us down, and we did close underneath the 50-day moving average. But same thing here, we did use almost 100% of the implied move. We didn't quite get to the top in each direction, but we got very close, and we closed relatively flat and underneath the 50-day moving average. QQQ closed down 0.2%, VXN up 2.91%, and we did stay completely within the implied move today. So absolutely beautiful price action if you were using the outer edges here. And I actually put on some very different trades today. At the close of last year, I put on in both SPY and QQQ an iron butterfly trade to take advantage of the middle of the trading range. And I also put on an iron condor to take advantage of the outer edges. And then today, when we popped up, I did have bear call spreads at the top and bull put spreads at the bottom. So I'm not saying this is a trade that would pay every single day, but because of the nature of today's price action, I had every single one of my trades that I put on close green. And it's a strategy that I came up with over the holidays, and I'll be talking about it a little bit more as I get to see it play out. But today was the first time I tried it, and it was a massive win to start the year. So really excited about that. And then taking a look at IWM, we did open here with a gap up as well to the top of the implied move. So 224 was the top of the implied move. Look at that. We literally pulled right back as soon as we got there, down to the 35 EMA, and then we did close underneath the 35 EMA. We did close green today, up 0.08%. Small caps were the only ones that closed green today, and we did trade here completely within the implied move as well. And look at how flat IWM has been trading, consolidating sideways ever since that big drop. We've been seeing price stay within this channel between 217, let's call that 218, and 226. So that was IWM and DIA. We did open with a gap up here as well. We did open right in this gap from the end of last year. This was December 30th, and from there we pulled right back down underneath the 35 EMA, and we did close down. And this was the implied move for Friday's contract, and we definitely stayed well within that. And so far we are making lower lows to start the year. So DIA down 0.4%, and we did close within the implied move. I don't think I mentioned when going over IWM, RVX did close up 0.64%, but I think I touched on everything else. So that was the first day of 2025. Tomorrow is Friday, and let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you have any questions at all. And if I helped you to nail an awesome trade and you want to help support my channel, the thank you button is always available. All right, so starting in SPY, and there are a ton of levels to know here. So the implied move for tomorrow is between 579 and 591, and the 30-day average volatility rounds out to that as well. And the implied move on Monday's contract is between 577 and 592. And before we go to the upside, right in the middle, right where we closed, is where we did see support in that last week of the year. It was not a strong support. Clearly we broke back underneath it, but prior to that, it was right here. We saw that as a support. We dipped into that election gap here. But even further back, we did see that level right here around 584. And before that, it was a resistance. So before the election, 584, 585 was a resistance level. And then we had the election gap right here, and we gapped over that. So that was a previous support. It could go back to being a resistance now that we've cooled off from the election rally. And that level is right here. That is exactly where we closed. So front and center, that is 484.50 or 485, and then above that we do have that 35 EMA. That 35 EMA was a very strong resistance after we got rejected from the 30-minute 200 moving average right here, and that was also a rejection from previous support up here at 602. Those two levels, once we gapped away from that, 35 EMA was resistance. So that is right above us. And if we do get above that, the next level is 591. That does line up right with where we have resistance. And on Monday's contract, 592. The 50-day moving average is above that, above the entire trading range. That is still pointing up slightly. The 1 hour 200 moving average started to point down today. So even though the 50-day moving average still has some upward momentum, the 30-minute and the 1 hour are bearish. And then underneath us, we do have the next level of support right here is at 580. That could be rounded to 581. And that is right at the top of the election gap. Now zooming back out, we did have a down gap right before the election, and then an up gap above those previous highs, above that level where we are right now. And these gaps where they overlap, they will always fill. Sometimes it takes some time to fill, but we are right there. We have the 4-hour 200 moving average underneath the bottom of the implied move, which is 579, and that is all within the overlap of the two gaps right here. So let's zoom in really quick. That is 579, bottom of the implied move, 4-hour 200 moving average, and that is a big level. And 577 is the bottom of the implied move on Monday's contract. And then we have that down gap from before the election and the rest of the election gap. And the bottom of where they overlap is at 576.58. So that could be rounded up to 577 or down to 576. And we are oversold here on many time frames, but we definitely still need to fill this gap up right here. And as of right now, we have not crossed above this signal line right here. And then SPX, the implied move over here, is between 58.15. That's a little messy right there. I'll fix that to 59.25. All right, I moved that text over. So that's the 4-hour 200 moving average right here. 58.15, bottom of the implied move for tomorrow. 59.25 is the top. And then on Monday's contract, 5,800 to 59.40. And right in the middle is where we have that previous support. It was where we saw all-time highs before the election gap up, and that level did catch us a few times. Zooming out back here, we did see that as a sloppy support, but it did catch. 1-hour 200 moving average was right here, but that level did 58.68 right there, did catch us before that big rally to make new all-time highs. This is the election gap right here. Before the election, that is where we had all-time highs. After the election, we gapped over that, and that has been a support level on each drop down, and we closed right there today. So first day of the year, and we are right at where we had all-time highs before the election. And to the upside, 35 EMA. That was a strong resistance ever since we did gap down back underneath the 30-minute 200 moving average and back underneath the 35 EMA, which was bearish because it's underneath the 30-minute 200 moving average. So right there, resistance, and that is right above us. If we get above that level, 59.25 is the top of the implied move. That does line up with where we did see a little bit of resistance right here underneath that 50-day moving average. 59.40, top of the implied move on Monday's contract. We have that 30-minute 200 moving average coming down. 1-hour 200 moving average has lost momentum, and 50-day moving average has a slight upward tilt, but it's losing momentum as well. So that could be a resistance level if we come up to it. We did see it as such at the very end of the year here, and then again here, and then we pushed away from it the first day of the year. So that is the upper half of the trading range. To the downside, we do have the top of the election gap. Today we did bounce right there, which was a previous support. This was on December 20th before we saw that Christmas rally. Then underneath that, 58.15 is the bottom of the implied move, and that sits right on top of that down gap underneath that 4-hour 200 moving average on 5,800 on Monday's contract. And bottom of where the two gaps overlap, 57.82, and round that up however you need, either to 57.90 if you're buying premium, and if you're selling, you might want to look to 57.75. And I do have a dashed green line there that might be a previous support. Yeah, we did have support and then resistance at that level. So 57.75-ish, bottom of this down gap, and just below where we have the election gap. So pretty intense trading range for tomorrow. Not as easy as today's trading range, but really realistically speaking, we do have this one level right here and the 35 EMA, and then just this gap right here, and that is what is in tomorrow's implied move. So not terribly difficult, but just a lot to know about. And again, we did not cross back up above the signal line here, but keep an eye on that because we are oversold on a number of time frames. That 4-hour 200 moving average, that's a huge level. If we do drop down there, I would expect a reasonable bounce at that level, especially since we do have all of this here as well. And then taking it over to QQQ, implied move for tomorrow over here is between 505 and 516, and that is from options. And then the 30-day average volatility is a little bit wider. It's 502 to 518, and then 502 to 518 on Monday's contract. So that lines right up with that 30-day average volatility. And then to the upside, we have the 50-day moving average. That level has been catching us. We did see a bounce here on December 20th, just a little bit above the 50-day moving average. Then we did see right here a little bit above that. That was on December 30th. Then December 31st, we bounced. And then we actually closed right on top of the 50-day moving average to close the year. That was a pretty wild close. And then today we bounced up. 35 EMA dropped us underneath. And now we are underneath the 50-day moving average, which really does say a lot, and that is a really interesting way to start the year. And then above that, 35 EMA, strong resistance all of last week. And that 35 EMA, once we dropped underneath it, that 35 EMA pulled back up to the 30-minute 200 moving average. And right here, you could see that 35 EMA was resistance at the 30-minute 200 moving average. And then for the price, it was resistance for the rest of the week until we got underneath the 50-day moving average. So pretty intense level right there. If we happen to get above these two levels, and we are oversold, so it is possible, even though we don't have very strong momentum here, but if we do get above it, then the top of the implied move is at 516. That does line right up with resistance right here, and 518 on Monday's contract, and that is just underneath the 1-hour 200 moving average. To the downside, we have 505 as the bottom of the implied move. We do have support from today right here, just underneath 506. So 505, 506, however you need to round that. 502 on Monday's contract. 4-hour 200 moving average is coming into view. We are pretty overdue for a hit on that. And if we do drop to that within the next few trading sessions, I would expect a pretty decent rebound here, as we would be pretty oversold at that point. And we do have a pretty interesting triple gap from before the election, and it was a up gap, a down gap, and another up gap. And where all three of those overlap, we have this wild gap right here, just underneath the 4-hour 200 moving average. The bottom of that gap is at 492. Just in case you're looking into next week, if you're bearish, we do have 492 as the bottom here. Another support level right here. That could be a place where we bounce. Remember, gaps that overlap always fill. It might not be tomorrow or next week, but we will fill that level eventually, and it could be next week. So that is right underneath that 4-hour 200 moving average. So I got a little bit ahead of myself, looked a little into next week, but this right here is tomorrow's trading range. Let me zoom in real quick, make sure I got everything, and it looks like I did. So that is QQQ. Then moving on to IWM, the implied move for tomorrow, 218 to 224. That is from options. The 30-day average volatility is $2 wider in each direction, 216 to 226, and on Monday's contract, 217 to 225. To the upside, we do have the 35 EMA. That hasn't really been support or resistance, but we have been chopping around that level, and we have seen it as resistance here. We have pushed back away from that level, but we also got above that level, and we have been consolidating. And if we do put a regression trend on that, once we dropped over, we are in a slightly downward tilting sideways channel, and that almost lines up with the implied move for the next 2 days. So that 35 EMA is the first level to look for right here. If we get above that, then we do have a little bit of resistance right here at the top of the implied move, and 224 is the top of the implied move, 225 on Monday's contract. If we do get up to the top of the implied move, then 224, 225 might be a good bear call spread on the day. I might even look another strike out, 225, 226, if we do get a push up to close the week. And that would also take into account that 30-minute 200 moving average and its downward momentum that is coming down from above. So dashed line right here, let's see if that was a previous resistance right here, and moving backwards, election gap, we filled that. Is that a resistance? We did see a bit of resistance right here. We got above it for just a second, and yep, resistance right here and right here. So yeah, we do have a little bit of history at 225 as a resistance level, and that is just above us, just a little bit above 225. And then to the downside, we have support right here around 218. That's also the bottom of the implied move. 217 on Monday's contract, and we do have lower highs in Stupid Willie and higher lows, so that's not really giving us a whole lot on direction. I looked at the 1 hour time frame too, and we have from overbought to oversold and then flat, so really no leads on where this is going. We're just gonna have to see which way we break out of this pattern, this sideways consolidation here. So not a difficult trading range tomorrow, but also no leads on direction, so maybe some neutral plays could be good. And Fridays tend to be green. We've seen a lot of red lately, and a green day to close the first week would be awesome, but just be aware of this right here. We do have some resistance at the top of the trading range. And then lastly, we have DIA. Friday is the only day that DIA has a 0 DTE contract, and I didn't put my numbers in here, so give me just 1 second. All right, so numbers are in, and the implied move on tomorrow's contract is between 420 and 428, and the 30-day average volatility is 417 to 430. And I will not be looking at that next contract for next week until the weekend because we don't have a Monday contract. So we're just looking at this as the trading range for tomorrow, and we have the 35 EMA as resistance, first level to the upside, and we did get above it today. We gapped over it, we landed right in this gap, and then we got right back underneath the 35 EMA. So that level is right in the upper part of the trading range, and if we get above it, then we have 428, and 430 is the 30-day average volatility. That takes us up to the top of this gap, which we did try to get into today. So if we close it out, then resistance would be around 430 with that 30-minute 200 moving average, negative momentum here at the top of the trading range. And then to the downside, we do have, I'm not going to call this a support, but our last low right here, 421.63, which is a lower low. We are still in a downtrend, making lower highs, lower lows, and seeing resistance at the last gap. And underneath that, 420, bottom of the implied move. And we do have, and this actually could be support. Let me go back here because we did see right here, and that looks to me like that was the election gap. So yeah, bottom of the election gap could be a support. So yes, let's call this support at 421.5. And then the next level underneath that is where we did see support right here. That is with that FOMC first rate cut. We saw support, and that is underneath the trading range. That's more if you're looking into next week. If we do start trading down and you're looking for a target for next week, we have 416 as the next support. So definitely still in a downtrend after that drop. We saw a Christmas pop and then lower highs, lower lows. And that is tomorrow's trading range. And have fun tomorrow, guys. Trade safe. Make sure you take profits when you're up. And I will see you on Sunday night.